Welcome to Strategic Alternatives, the RBC Capital Markets podcast. I'm your host for this episode, Joe Coletti. We're recording live at RBC's Energy, Power, and Infrastructure Conference in New York, and I'm joined by François Poirier, President and CEO of TC Energy. TC Energy is a leading North American energy infrastructure company with a natural gas pipeline network that supplies more than 30% of the natural gas consumed daily across the continent. Today, we'll discuss how TC Energy is navigating rising demand, infrastructure investment, and Canada's evolving role in the global energy landscape. François, thanks for being with us today.
My pleasure, Joe. Happy to be here.
So first of all, happy anniversary. I realized TC Energy celebrates 75th anniversary. I know you were ringing the bell at the New York Stock Exchange not so long ago. So it's a great time to have you guys here.
Absolutely.
So you've really sharpened your focus around natural gas and power. As you start to look ahead, can you maybe describe a little bit of what you see as the next chapter for the company?
Yeah, so one of the things that we've been focusing on over the last few years is to really make sure that we can deliver above average growth, but with low risk, and be able to repeat that performance year after year after year. That's been the TRAP brand, if you will, for the last many decades. So over the last few years, we've imposed a maximum capital program each year of about $6 billion to make sure we can sharpen our execution, make sure we're allocating capital in a responsible way, and ensure that we have a strong balance sheet. Now we're at the point where we're ready to lift the guardrails and to allow market demand to determine the size of our capital program. We're doing extremely well. We're delivering our projects on time and on budget or better across all footprints and all asset types. And the demand drivers for natural gas transportation service and for expanding our nuclear power generation are as good as I've seen them in the 35 years I've been in this business.
You touched on some of the demand drivers. We always talk about, what are the things that are shaping energy markets right now, which are so many different things, from electrification and LNG demand to industrial growth, data centers, energy security concerns. How do you think about TC Energy's role in the midst of all this in terms of the North American energy system specifically?
Yeah, well, we're the only natural gas transmission company, Joe, that's in all three countries on the continent. So we can move natural gas to all the shores of the continent for LNG export. We're also very present through the Midwest of the U.S., where there's a lot of coal-fired generation that's going to be converted to natural gas. We also happen to be within 50 miles of about half of all the data centers that are under development in the United States. So when you look at just general electrification, when you look at LNG exports, and when you look at data center growth, we've got some very nice tailwinds.
How do you also think about the combined role of things like natural gas, nuclear, and these other power solutions, particularly in supporting the affordability, the reliability, but also sort of long-term growth at the same time?
We've talked for a couple of years now about balancing what's called the energy trilemma of affordability, reliability, and sustainability. And this is where natural gas really does the best job of balancing all three. It's plentiful at a very reasonable price in North America. It is affordable, and emissions profile of natural gas as opposed to coal or diesel or fuel oil is, half to 2/3 of the emissions footprint of those alternatives. And it's also deployable in very manageable increments over reasonable timelines. So those things give us the comfort that over the next couple of decades, natural gas will continue to be the fuel of choice, not only in North America, but around the world, as you've seen demand for LNG across the world has increased significantly, particularly when you add what I say is a fourth component to this, which is the energy security one. Geopolitical events have underscored the importance of security of energy supply.
What supply side constraints do you think could slow the ability to meet the demand that we're seeing?
With fracking technology, Canada and the United States have abundant supply. Interestingly, Canada produces about 180% of its annual energy needs every year. The US produces 125% of its annual energy needs, which means that we can both afford to be exporters. Take Japan, for example. Japan only produces 10% of its annual energy needs. So we don't really understand what energy insecurity feels like in North America. But you flip that over to an opportunity What it means is that North America can play a growing role globally to provide energy security to our allies, whether it's in Europe or it's in Asia.
How else do you see North America's role sort of evolving as buyers continue to diversify?
Yeah, so I do think in terms of LNG exports that we can be a much more significant provider. I think the west coast of North America has a significant transportation cost advantage to Southeast Asia. These are regions that have historically relied on the Middle East or on Russia for their energy supplies. It's unlikely that we'll see permitting out of an LNG facility off the west coast of the United States. You look at the states of Washington, Oregon, and California, they're not as supportive of that type of energy infrastructure, which presents a really exciting opportunity for Canada and Mexico to play a more meaningful role in exporting LNG around the world.
So I want to shift a little bit and talk about capital strategy. And I'm curious how you're thinking about where TC Energy should deploy capital, but also what you think makes a compelling opportunity for you in investment.
For the first time in about 15 years, we have alignment of policy support in Canada, US, and Mexico around the need to accelerate infrastructure development. For different reasons in each of the three countries. Canada needs to diversify, not away from the US, but beyond the US and export commodities on a global basis. The United States wants to dominate the AI race with China and other countries. And Mexico has aspirations to grow its economy and improve the quality of life of its citizens. So for us, capital allocation focuses first and foremost on what are the fundamentals in each of the different projects. Do they require subsidy or not? Do the economics of a project stand on their own? And then it's quite simply a bake-off. We're going to allocate our capital in whichever project in whichever country delivers the highest risk-adjusted returns. That's our job. That's what our shareholders expect us to do. We do also want to make sure we have some diversification. If all of our growth is beholden to one country versus another, I think you're more exposed to changes in policy in that country. So we do try and maintain some balance in our capital allocation across the three geographies. But all told, it does really boil down to what are the risk-adjusted returns. And for the last couple of years, anyways, the U.S. has been the market in which we've allocated the most of our discretionary capital. But I see an opportunity returning for capital investment in Canada, given the outsized role that Canada can play in the future of the LNG market.
You've been involved in many major projects, and I think one of the things we'd love to get your perspective on some of the lessons that really stand out from your experience, both across execution, but also risk sharing, customer alignment, and especially in the market that we're sitting in right now.
Firstly, it's very important to have strong relationships with your key stakeholders before you ask them for permits or you ask them to support your project. So one of the first things I did when I became CEO of TC Energy is I brought on a very experienced external affairs executive to report to me directly and sit on our executive team so that he understands exactly what's going on in all parts of our business. Of course, in Canada, Indigenous groups are not just stakeholders, they are rights holders. So they, by definition, have standing in our regulatory processes. So we're constantly striving to get better at building relationships, no surprises. And what's really evolved in Canada is on new greenfield projects to involve and invite Indigenous communities to be equity holders in our projects along with us. In all three jurisdictions, the game is a very local game. You have to have boots on the ground, understanding what the local issues are with your key stakeholders and making sure that they have a good understanding of the impacts of your project. I think back to the mid-90s where to be a strong pipeline company, you needed to be able to raise capital cheaply, get your regulatory permits, and be good at construction. Of course, you still need all of those three things, but you need to also be good at community relations, Indigenous relations, government relations, because policy can really influence everything you're doing. So the skills an energy infrastructure company has to be successful have definitely expanded over the course of the last couple of decades.
What underappreciated shift do you think may continue to reshape in the future the North American market, particularly in the next 5 to 10 years?
So I do think that we are just at the front end of the AI boom. That is where I think North America, because of our abundance of energy supply, will have a distinct advantage. We also have abundant critical minerals. We have strong, well-educated, innovative workforce, and technology is going to bring lots of opportunity for us in the energy infrastructure space.
You've been vocal about the need to unlock Canada's energy potential and strengthen the economic sovereignty of the country. What policy or regulatory changes do you think matter most if Canada really wants to compete on large-scale energy and infrastructure investment?
Oh, I always like to say that uncertainty is the enemy of investment. And I've been very pleased with how this new Liberal government under Prime Minister Carney has been listening to project proponents. And we talked about providing certainty of timelines for regulatory approvals. We talked about helping make the sanctioning and permitting of projects less political to help build that certainty. They established a limit of 1 year for permits once all of the information has been included in the files, and also making this governor and council or cabinet approval, if you will, not at the end of the process once we've spent hundreds of millions of dollars developing a project, but at the front end of the process so that we can go through the development with the certainty that we'll have the political support if and when the regulator deems it appropriate to give us permits. So there is definitely a move to improve certainty, and I think that will attract more foreign direct investment into the country.
So one final question. You've led TC Energy through a period of major portfolio change, large project execution, and really heightened debate about the future of Canada. What have you learned about leading through this period?
I think having humility and not having a sense of entitlement is extremely important. The company's values have to align with the values of its employees. Otherwise, it's very difficult to have the kind of employee engagement and have a psychologically safe space for people to constructively challenge each other and to innovate. And so you mentioned safety. It's our most important value. And it's no accident that while we are currently generating record profits and our asset availability is very high, we've had the strongest safety record the company has seen in 6 or 7 years. So all three of them go together. And I like to tell our people that while you're working on safety, you're actually working on the business.
I think that's a great way to close. François, thank you so much for joining us. Thanks for being at the conference. We wish you and TC Energy best of luck, and maybe we'll see you again next year.
Thank you, Joe. It's been a great conference.
Thanks for tuning in to another episode of Strategic Alternatives, the RBC Capital Markets podcast. This episode was recorded on June 2nd, 2026. Listen and subscribe to Strategic Alternatives on Apple, Spotify, or wherever you get your podcasts. If you'd like to learn more or continue the conversation, please contact your RBC representative or visit rbccm.com/strategic alternatives. See you all next time.
This content is based on information available at the time it was recorded and is for informational purposes only. It is not an offer to buy or sell or a solicitation, and no recommendations are implied. It is outside the scope of this communication to consider whether it is suitable for you and your financial objectives.